The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Show with Silvio Amaro. It's 8 a.m. here in London, 9 a.m. CET, and stock markets across Europe are opening up for trade. And don't forget the first trade since prior to Christmas. So the early trades we're seeing on the boards just filtering across. You can see a little bit of green on the board. So we're moving slightly firmer from the outset. As we wrapped up pre-Christmas, the stock 600 was up about 0.2%. Very faint territory versus the Santa Claus rally that was playing out in quarters of the US markets. So as you can see, we've scooped up about 0.1% from the outset. Sylvia.
And as we look at the final trading days of 2025, also worth keeping in mind that, of course, we're likely to see also lower volumes this week. We have the bank holiday on for New Year's Day as well. So let's see what this week will have for markets. In the meantime, as we focus on today's day, we have technology at the top, trading higher by about 0.6%. Basic resources also making gains of about 0.5%. This is a sector for us to follow very closely today amid a general rally taking place in metals. So let's see how that narrative will unfold as well for the rest of today's trading day. But no doubt that is one of the big focus for investors today. But let me take you to the worst performing sectors and you get a better indication of where we are as we begin this new trading day. In terms of some of the sectors and the pressure at this hour, not huge numbers ultimately, but utilities and industrials and a little bit of pressure at the open. Let me take you to the different bourses too, so you get a better indication of what's happening across the European continent at this early hour. We're actually seeing a little bit of upside for the CAC 40. Ultimately, however, looking at these initial numbers, we're not getting a huge sense of direction, ultimately, of where investors are wanting to go today. So let's see, indeed, how this trading day will unfold. In the meantime, a couple of stories that we are tracking today. One of them involves defense, ultimately, because the President of the United States, Donald Trump, has said that talks aimed at ending the war in Ukraine are, quote, getting a lot closer, but acknowledge that one or two very thorny issues remain. The US president spoke after holding talks with Ukrainian President Volodymyr Zelenskyy in Florida on Sunday. Now, both presidents said that progress has been made to end the war, with Trump adding that a security guarantee for Ukraine was close to 95% then. And we know how important those security guarantees are ultimately if, in the case of Ukraine, they were to say yes to a peace deal. But following the talks, Zelenskyy outlined the details of a 20-point plan, including Europe's involvement, while the US leader provided an update on a potential timeline. Listen in.
We have great achievements, 20-point peace plan, 90% agreed, and US-Ukraine security guarantees 100% agreed. US-Europe-Ukraine security guarantees almost agreed. Military dimension 100% agreed. Prosperity plan being finalized, and we also discussed the sequencing of the following actions. And we agree that security guarantees is a key milestone in achieving lasting peace, and our teams will continue working on all aspects. We also had a joint productive call with European leaders, like President Trump said already, and a lot of leaders, including NATO and EU. And we agreed that our teams will meet in upcoming weeks to finalize all discussed matters.
So if it went really well, maybe a few weeks, and if it went poorly longer, and if it went really poorly, it's not going to happen. That would be a shame. There's that chance also. It's possible it doesn't happen. But, in a few weeks we will know one way or the other, I think. Look, it's been a very difficult negotiation, very detailed.
So let's discuss some of the market action with our next guest. Jacob Pedersen, Head of Equity Research at Citibank, is joining us this morning. Jacob, great to see you once again. Look, I'll start by getting your thoughts on some of these geopolitical dynamics here. We hear the President of the United States, the President of Ukraine saying that they have made more progress. And at the same time, from an equity perspective, though, I'm interested in getting your thoughts in terms of how are you interpreting that as we approach the year end?
Well, I consider it a positive because what we need is peace in Ukraine, and that will be a positive for European equities and the return on European equities. Short term, of course, it could lead to a setback in defense stocks, but I think that it'll quickly be apparent that the investments needed in defense in Europe will continue, and they will accelerate massively over the next years. So I think definitely a positive potential for European equities if we get some kind of peace, and of course the security guarantees from the US as well are indeed very important for not only Ukraine but for Europe as well.
So thinking still about how this geopolitical dynamic is unfolding at this stage, we're also looking at gold and silver smashing new records. The momentum is easing a little bit at this hour, but nonetheless, we're still looking at a very, very strong performance so far this year. From an equity point of view, though, how are you looking at this momentum in metal prices?
Well, of course, positive for basic materials. We've also seen that industry shoot up well in the recent months. So in that respect, putting some pressure also in the rise in metal prices on inflation if we look forward. But we don't think it'll be at a tipping point where it'll increase inflation above expectations and you could say cause inflation to be a stumbling block for equities. I think I'm more concerned in that respect of the lasting effects of Trump's war on tariffs, how that'll play out when that unfolds into the pricing in US in the next months. We had a very positive November reading on the inflation, but looking into the next month, we could see an uptick that could take some investors by surprise.
So let me pick up on that point in terms of the risk here of further trade tensions, because if you look at European equity performance versus US equity performance so far year to date, a lot of pockets in Europe have done a lot better than some of the markets in the United States. Do you think that the biggest risk in the new year to this performance for European equities is actually coming from further trade tensions?
Yeah, if we see an escalation of trade tensions, that'll be a huge negative surprise for European equities. If things unfold in an undramatic way during 2026, we will see a lot of investment beginning to impact in Europe. Steep investments in defense, in security, in infrastructure, digitalization. Energy. So we have a lot of investing going on in Europe that should lead to a quite steep acceleration of earnings growth in the region after 3 years of a standstill.
Jakob, there is a lot of suggestion that the revival of Europe in 2026 really does depend on this German package, the being infrastructure, defence spending. If that is the case, is it better just to play it closer to home? Because if the revival story works, it'll work in Germany first.
Yeah, well, I think if we look at isolated at the revival story, Germany, of course, is center stage here. But we also have a market in France that has been lacking the performance of other European markets because of the political turmoil. So I don't think that this and the uptick in European equities looking into 2026, if things unfold undramatically on the geopolitical scene, it will not just be centered around Germany, but of course. If we look at the rebuilding of Europe when it comes to infrastructure and digitalization, a lot of it is centered around Germany and the center of Europe. And I don't think that we should forget either that a stabilization in China is also positive for Europe. That is quite dependent on continued growth in China.
Jakob, let me ask that seasonal question. Why has the Santa Claus rally being reluctant to materialise in the European markets, yet we've seen it in pockets of the US markets? Does that suggest anything about sentiment going into next year?
I'm not sure. I think that this rally is also a consequence of what happened in November, where we had the AI scare that was primarily centered around the US. So I don't think that we should take what's happening right now and extrapolate it into 2026 as such.
When it comes to the US Federal Reserve, central banking, all important, the US markets at least are looking at the potential for more rate cuts into next year. That's also moving the metals market. Do you think investors are right to be pricing in a couple more rate reductions from the US central bank?
Well, I think at least one, but they're probably not coming in January. But at least one, and that is probably not as much as investors are expecting right now. We'll of course also have a lot of attention regarding Fed independence moving further into 2026. The financial markets need an independent Fed, and I think that'll be quite visible depending on how things pan out.
Jakob, let's look at Denmark for a moment. I know two of the stocks that you follow very closely are Novo Nordisk and Ørsted. Last week, you actually decided to lower your rating on Ørsted. Walk us through the rationale behind that, and to what extent do you think the story has also shifted for Novo Nordisk?
Well, if we look at Ørsted, to begin with, huge uncertainty regarding offshore wind in the US. We've seen the Trump administration go very far to make things difficult for this industry, and even stopping and issuing stop work orders on projects very close to being finished, actually. So a huge stumbling block in the US, and I think political uncertainty that will continue to rattle over the Ørsted share for months to come. As regard to Novo Nordisk, a huge positive turn for the company, having the Wegovy pill being able to be marketed in the US with high weight loss, and the US market has taken Novo and a lot of I think outsiders by surprise in being a market where you could say that if you're able to shout the loudest, you also get the customers, and I think that Novo Nordisk now really has something to shout about in the US market, and I think that will resonate among the Americans.
Yeah, certainly some good news for Novo Nordisk coming up to year end. Jakob, where does this leave the Danish stock market? You've been talking to us a lot about the performance. Do you think it's looking well placed going into next year?
Well, in some respects, yes, because if I look at the international markets, even though that our base case is for an acceptable year when it comes to returns on the global markets, a lot of positives have already been priced into the international markets. Whereas I don't see that in the same respect in Denmark. Actually, quite the opposite. There's this huge investor skepticism regarding the Danish market because of Trump's tariffs. You know, among the stocks that we cover, we have a 30% revenue coming from the US. So US tariffs have been very negative for sentiment. We have a US dollar weakening during 2025, also being negative. And we got Trump's efforts regarding lower pricing on medicine and his reluctance to the wind industry that has also been very negative on some of the Danish stocks. We think that'll pan out better, and we think that actually the Danish stocks will disprove some of this investor skepticism looking into 2026, and with a lower than usual pricing on a lot of the Danish stocks, there is room to gain some of what has been lost in regards to return on global markets over 2026.
Jakob, thank you so much for giving us some thoughts into year end. We do appreciate it. Jakob Pedersen with us, Head of Equity Research, AL Sydbank. Despite concerns about the European IPO scene, 2025 was a bumpy year for the Frankfurt Stock Exchange, with a range of companies either listing or spinning off their subsidiaries. Annette has spent a lot of time doing these IPOs and at the stock exchange and looks back at the year that was.
in 2025. The Frankfurt IPO market did actually come back during the second half of the year, showing that investors' appetite for European capital markets is returning. Otto Bock, the prosthetics company, was the largest IPO here in Frankfurt with an initial market capitalization of 4.2 billion euro, while TKMS had an initial market capitalization of 3.8 billion euro as the parent company ThyssenKrupp spun off the submarine maker. Both TKMS and also Otto Bock have seen their shares rise on the first day of trading. We spoke to both.
It was a very intense time now, the last months, visiting and talking to all the investors. So we got already quite positive feedback during the talks and the management roadshow. So today it's a very nice confirmation of all the information we got before. So we are indeed happy that the start went so well.
It's very difficult to forecast something if it's a spin-off like this. So I was expecting always the good because I'm an optimist, right? But at the end, I would say I'm really surprised because it has completely shown the potential, what is in there. And I'm happy. And it's a great day for TKMS.
Continental also spun off its automotive unit, Aumovio, as it looks to increase profitability by separating its businesses.
We are very happy to be independent now. I mean, now we can move forward. We have the great chance to bring all the ideas which we have been working on even faster into the market. For us, the price of today is nice, but important is that we create value on the long run. No? We want to be a stable player for our partners, for our customers, for our employees, and specifically also for our shareholders, to create value step after step, quarter after quarter, year after year. That's important.
Looking ahead to 2026, will companies such as BrainLab or Autodoc, which put their IPOs on hold during 2025, will come back and finally list in Frankfurt? And which companies are looking to IPO or spin off parts of their businesses and potentially bring it here to the Frankfurt Stock Exchange? Deutsche Börse has been contemplating an IPO for its own ISS stocks unit for most of the year, while the owners of TK Elevators are reportedly weighing up listing in Frankfurt or the US. We'll have to wait and see what 2026 has in store for the Frankfurt Stock Exchange.
Well, coming up on the show, from data center spas, that's right, to data center spas, not actual spas that we would have been smiling about. From data center spas to service in space, the future of cloud computing is projected to look very different. But is it just a sci-fi fantasy, or are these designs feasible? We'll discuss next.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Amid the rise of AI, 2025 has seen the importance of data centers come to the fore of the conversation. But the energy demands of the technology is forcing a rethink on how data centers are built and how they can become sustainable. April Roach joins us with more. April, it seems I was wrong. I thought we were not actually talking about spas, day spas, but we are, just with the wrap there being a server sort of backdrop here.
Yeah, that's right. I mean, as you know, AI is advancing at breakneck speed, and that's essentially forcing a rethink of how these facilities can sort of coexist a bit better with the environment. So I spoke to Lenovo, who carried out a study with some architects from Mamu Mani and some engineers, and they sort of drew up some concepts of what these facilities could look like in the future. And as part of that, they came up with this idea of the data center spa, and that's essentially where excess heat from the data center could be used well being setting to power something like a spa. And then also in turn, the heat from the spa could be repurposed to sort of power the cooling technologies of the data center. So you have a sort of symbiosis, mutually beneficial system going on there, because
circular energy.
Exactly, yeah, because you're looking at facilities, especially when it comes to AI data centers, where a lot of the technology is going into keeping these chips cool. So then why not pair that with a facility that does actually produce a lot of heat as well and make it a bit more beneficial for the community? So that was kind of the thinking behind it.
I have to say that when trying to picture this, it feels like we are in some sort of sci-fi kind of world. Perhaps we're not that far ultimately. But what highlights to me is that there is a timeline here at which point the design that we currently have for data centers might not be the most feasible. Is there a rough idea of that timeline of when we might have to have a different concept for the way the data centers work?
I think it's really difficult to say. I mean, companies like Lenovo and these architects and engineers are kind of sounding the alarm now, because they say we see a world in which data centers are not fit for purpose and where we need to kind of innovate and adapt to make them more sort of sustainable. And some of the designs they look at are quite, ambitious, and they say, some of this won't happen until, 2055, because we would need to see a lot of changes in terms of legal changes, regulatory changes. But I do think it's interesting to note that we have some examples where, this kind of thing is happening now. Look at last year when we had a data center from Equinix being used to power the swimming pools used during the Olympics. So we are seeing these examples where excess heat is being used for residents and homes, and I expect that we'll definitely see more of that in the future.
To what extent can you bring scale to these types of concepts then, if they're more one-off ideas, a data center here that powers a spa, data center there that powers a pool, one in space? It feels like, given the requirements here, the amount of data centers needed, that some sort of scale to this idea is also necessary.
Yes, absolutely. I mean, especially when you talk about orbital data centers, we're talking about high costs here. I think that's the big thing. A lot of companies are starting to put money behind that. You're seeing Google with its sort of Suncatcher project, and CNBC was first to report just last month that StarCloud, which is a startup backed by NVIDIA, launched a chip into space, which has a chip which is like 100 times the power of GPU compute that's ever been there before. But in terms of cost, we're going to need to see the cost of actual launches come down quite significantly for this to be more commercially viable. So we're quite some way away from there yet.
When you think about some of these new ideas for how data centers could look like, are they highlighting how much pressure ultimately they're putting in terms of energy resources?
Yes, absolutely. So I think what they're trying to do with these designs is look at alternative solutions where we can, use some resources from the environment as well. That's a big part of it, using more sort of renewable energy, taking some of the pressure off the grid, because that is one of the big pressure points here. And we're really kind of in the face of what some are calling a looming digital infrastructure crisis. So the urgency is there to kind of consider new ideas that would be more sustainable and better for the environment.
It's a different twist on becoming a property mogul, isn't it? A data center mogul of some sort.
Exactly.
April, thank you for bringing us the story. April Roche with us. For more on this story, you can check out April's article on CNBC.com.
And elsewhere, Julian Hoggett is the CEO of the London Stock Exchange, and she made history as the first openly gay leader of a global stock exchange. And today, she is one of the most important voices in British capital markets. On executive decisions, she tells Steve that being true to herself has shaped how she leads, how she builds culture, and how she makes decisions that ripple across the financial world.
My view is that I want to create the best possible environment where everybody who works with me has an equal opportunity to thrive. It's really arrogant to think that I run and make everything that happens in the London Stock Exchange. I don't at all. There's roughly 1,000 people who touch elements of what the exchange does every day. They are brilliant, dedicated people. My job is to make sure all of them can do the best possible job that they can do. So it's always teamwork. It's never about you. It's about what is the objective of the organisation and what is your particular role as CEO in making that work.
Yeah.
But if I don't have the right people and select the right people, empower them and then set the strategy, what's actually going to happen? And I think it's having that sense of really understanding what your role is and how you should spend your time.
You like making those big decisions, Julia?
I do. Yes, I do. That's true. But I make them so that we can move the organisation on.
Yeah.
I think most CEOs would probably say this, that by the time a decision gets to them, it's usually big, it's usually serious, and it's usually difficult. If you think of it as an organisation as sort of mountaintop, the person who's leading the organisation is sort of standing on the top with a perspective into the next valley and the next valley, and they can see whether there's a rain cloud coming or whatever else. And their job is to be looking at that kind of horizon scanning. Their next level down is standing just below the snow line, as it were. They can see a long way around, but they can't necessarily see what the crop on the valley floor is. But the person who is working at that level can see exactly what the crop is, whether it's healthy, whether it's got a swarm of locusts or whatever else. Every part of the organisation has a different perspective on the role.
What is the worst decision you've ever made?
I make probably lots of poor decisions in a day. I don't have one hanging over me that's I wish I'd done that one differently. But if I think about the ones where I go, I missed something there, it's usually, was I brave enough? Yeah. Was it a big enough decision? Did I go for the thing that's the easy
Because
option?
in hindsight, we should have been braver.
In hindsight,
Always.
we should have been braver. There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. I want to be proud of every decision I've made, not just tomorrow, but in 20, 30 years' time. And therefore, if that becomes the basis on why you make a decision, you've given yourself permission to take the long view. And even some things which in the short time are not popular or look difficult or have people throwing brickbats at them. If you feel it's the right decision, it's the right thing to do. And if that's the logic, it becomes easier.
And you can listen to the whole episode with Julia Hoggett right now in the usual podcast places. And you can also watch it on our YouTube channel as well as on CNBC.com.